Welcome everyone to the deep dive. Today we're jumping into, well, the really dynamic and honestly often exhilarating world of emerging cryptocurrencies and the market trends shaping their future. Our mission, like always, is to pull out the most important bits of knowledge from the sources you've shared, basically acting as your shortcut to getting properly informed. And I'm genuinely curious myself to dig into some of the surprising facts, the real world uses in this space. Because, yeah, there's incredible potential bubbling up, but there's also definitely a need for caution. Finding that balance, that's what we're aiming for today.
Absolutely. And our mission really with this deep dive is to, well, cut through all the noise, help you understand the actual utility of specific crypto projects, spot the significant trends, and talk about what it all means for understanding the wider crypto market. It's so important to look past just the price charts, really get into the underlying tech and what these things actually do.
Right. And given those, well, dizzying numbers we often hear about, it immediately raises the question of how you navigate this effectively. When we talk crypto, that thrilling potential for, skyrocketing value, that's usually top of mind. And yeah, for good reason. Our sources point out that in 2024 alone, Virtual's protocol saw an increase of over 23,000%.
23,000.
Yeah. And Bitcoin, the big one, surged past $100,000. It added, $1.2 trillion to its market cap just last year.
Incredible numbers.
So the huge question on everyone's mind is, how do we find the next big boom? And maybe more importantly, is it even a good idea to try?
It's a totally natural impulse, wanting to chase returns like that, but it's so vital to remember that prices can drop just as fast as they climb. Now, the overall crypto market is trending upwards, generally speaking, but there's absolutely no guarantee that any single project is here for the long haul, or even the market as we see it now. Still, we can identify potential growth candidates by looking at projects capitalizing on really strong underlying trends.
Okay, like what kind of trends?
Things like artificial intelligence, AI, decentralized applications, DApps, or digital asset trading. These areas show promise because they have this inherent utility, which is frankly a much more reliable indicator than just hype.
That makes a lot of sense, yeah. So let's dive into some of those promising candidates, maybe starting with Render Token, RNDR. This isn't just, another digital coin. It's described as a unique service letting users rent out their spare GPU power.
Exactly, their graphics processing unit power for rendering tasks.
And artists or studios, they pay for the service using the RNDR crypto token. It's a neat idea, but what's the deeper implication here? Beyond just, renting out GPUs.
Well, what's truly kind of revolutionary about Render isn't just the service itself. It's how it really exemplifies the tokenization of idle compute resources. Think about that. It creates this genuinely decentralized liquid marketplace for processing power. And that could fundamentally reshape industries, Hollywood visual effects, maybe even AI model training down the line. It really sets it apart from so many other crypto projects because you can point to actual real-world use.
Like concrete examples.
Yeah, exactly. For instance, Render was used for the opening titles of Westworld Season 4, for a digital Coca-Cola ad they showed at the Las Vegas Sphere, and even for a Star Trek spatial experience with the Apple Vision Pro. Plus, multiple short films have leveraged it.
Wow, okay.
And the demand for this sort of thing is likely to grow significantly. Media companies increasingly need to convert text to images, and especially with this ongoing AI boom, which just eats up enormous amounts of GPU power.
And the growth numbers seem to back that up, right? In 2024, Render's network usage apparently more than tripled, over 40 million rendered frames.
That's right, a huge jump from about 10 million back in 2023.
And for context, its market cap is around $2 billion currently, which puts it sort of mid-tier, suggesting real adoption. Though that 52-week range, $2.54 to $11.31, definitely highlights the volatility, even for something with clear utility.
Oh, absolutely. Volatility is just part of the game here.
Okay, so from decentralized rendering, let's maybe pivot to a project known more for raw speed and efficiency. Solana. Often called an Ethereum killer because it's blazing fast and transaction fees are tiny, like a fraction of a cent. But does that speed come with any trade-offs for users or developers?
That's a really critical question. Solana functions as a pretty robust platform for dApps, decentralized applications. It's used heavily for DeFi, decentralized finance services, and for minting NFTs, non-fungible tokens, things like that. A 2024 CoinGecko study actually confirmed it's the fastest large blockchain out there. It averaged, I think, 1,504 daily transactions per second.
Wow.
And its theoretical max speed, an incredible 65,000 transactions per second. That makes it, 46 times faster than Ethereum?
46 times?
Yeah. Now, that speed does require higher spec hardware for the network validators, and some argue that could lead to a bit more centralization compared to other blockchains.
Hmm.
But on the flip side, it enables a user experience that's much more scalable for mass adoption. It's a trade-off, really.
Interesting. And it's fascinating that after taking a hit in 2022 and 2023, Solana's price really jumped in 2024. Even with those big returns already, our sources seem to suggest it might still have room to grow. Its current price is around
It's
$166.92.
definitely one that's recovered strongly.
Okay, now let's just focus again to something really forward-thinking, maybe collaborative. The Superintelligence Alliance, ASI. This is actually a merger of three pretty well-known AI cryptos: SingularityNet, Fetch.ai, and Ocean Protocol. It's an interesting move, unifying forces in a space that's usually pretty fragmented. What's the strategic why here, beyond just let's cash in on the AI boom?
Right, this merger isn't just like a corporate consolidation. It seems to signify a really strategic pivot in the AI crypto world. They're trying to build a foundational open source infrastructure layer specifically for decentralized AI. The core goal is this open source blockchain platform for AI research and development. The idea is you lend your computing power for AI model training and you get crypto tokens back. So this consolidation, it seems aimed at creating a dominant force, maybe even getting ahead of potential regulatory issues or centralized control in AI down the road. It plans to leverage the strengths of each part: SingularityNet's AI development expertise, Fetch.ai's autonomous AI agents, and Ocean Protocol's data sharing and monetization tech. It's definitely positioned strongly in the AI space. Current price is about 77 cents.
And, well, we can't really talk crypto without talking about Bitcoin, BTC. It's the undisputed top dog. And while it's not exactly a dark horse you expect to triple overnight, 2024 brought some really positive news that seems to have solidified its position even further.
Yeah, the huge development there was the SEC finally approving Bitcoin ETFs back in January 2024. That made it significantly easier for big institutional investors to buy Bitcoin through familiar channels, which adds this whole new layer of legitimacy and accessibility.
Opening the floodgates almost.
Kind of. And while all cryptos are volatile, Bitcoin's sheer size and its established network make it, comparatively safer and more reliable. It often acts like a barometer for the whole crypto market's health. So this regulatory green light really positions Bitcoin as a relatively lower risk, sort of foundational crypto investment choice for 2025 and beyond. Its current price is $118,642.
Wow, still up there. Okay, so while Bitcoin's the leader, the landscape is much wider. There's innovation happening elsewhere, especially in DeFi. That brings us to Aave in Ethereum. Let's start with Aave. It's a DeFi protocol, a lending platform, lets users lend and borrow crypto using smart contracts. But how do these smart contracts actually work for someone lending or borrowing?
Good question. Smart contracts are basically self-executing digital agreements. They're programmed to automatically carry out actions when specific conditions are met. So with Aave, if you lend your crypto, the smart contract automatically sends you your interest payments. Or if you borrow, it automatically liquidates your collateral if your loan value drops too low, all without needing a bank or middleman.
Okay, automated trust.
Pretty much. And Aave has innovated further with this real-world asset, RWA market partnership. This lets companies tokenize tangible assets, think real estate, art, maybe even future company revenues. Investors can buy those tokens, and the companies issuing them can borrow stablecoins against those tokenized assets. It really bridges the gap between traditional finance and crypto.
Interesting.
And speaking of foundational projects, well, there's Ethereum,
Mhm.
still the second largest crypto, the pioneer of smart contracts for dApps, basically the backbone of DeFi.
And Ethereum's had some big positive developments too, right? Back in September 2022, it switched to proof of stake. That massively improved its energy efficiency, over 99.9% reduction, was it?
Huge improvement, yeah.
And then, July 2024, the SEC approved Ethereum ETFs, another big step. So with all this good news, why hasn't its performance quite matched Bitcoin's explosive returns recently?
That's a really critical observation, yeah. Despite these major advancements, Ethereum's price hasn't seen the same kind of surge as Bitcoin lately. And that has led some institutional investors to sell off, it seems. The switch to proof of stake, where you stake your ETH to help run the network, was a massive technical achievement, incredibly energy efficient. And the ETF approval, undeniably bullish for institutional adoption in the long run. But Ethereum has maybe been a bit of a victim of its own success. Its wide usage means the network can get congested sometimes, leading to higher transaction fees or gas fees. That can put some users off. So this current period where maybe it's lagging Bitcoin a bit, some might see it as a buying opportunity for a crypto that much like Bitcoin, has shown real long-term success and staying power. Its role in the DApp ecosystem is just fundamental, even with the challenges.
Right. This all kind of brings us back to the big picture of crypto investing, that almost irresistible temptation to find the next crypto that explodes for those, life-changing returns. What's the realistic approach here for our listeners?
Oh, that temptation is very real. It taps into that desire for a big win, right? But I really have to give a clear warning here. Trying to find those tiny high-growth cryptos, it's incredibly difficult. It takes a ton of time, and it's extremely risky. Yes, smaller cryptos do have greater percentage growth potential, but they are also far, far more likely to just fail completely. You risk losing your entire investment.
A high-stakes game.
Exactly. For anyone looking beyond traditional assets, crypto offers this unique asymmetric upside potential. But understanding the behavioral side, the psychology of highly speculative assets, is just as vital as understanding the tech. If you're going to dabble in hunting for these smaller coins, it's probably wise to balance that out with maybe some cryptocurrency stocks or just sticking mainly to larger, more established coins to mitigate that risk.
And it's just so unpredictable, isn't it? Our sources even pointed out that you could do tons of research on a project and it goes absolutely nowhere. Meanwhile, some practically useless meme coins like Shiba Inu or Dogecoin somehow defy all logic and just go to the moon.
Yeah, it happens.
It really shows how speculative that end of the market can be, almost like playing the lottery.
It's a fair comparison in some cases. The infographic we looked at made a really crucial point. Following trends or trying to predict which coin will pump next, that is not a good long-term investment strategy. Now, there's nothing inherently wrong with putting a very small speculative amount aside if you're curious and you can genuinely afford to lose every penny. But your expectations and definitely the amount you invest should be kept very, very low. Understand that speculation, manage your risk. That's key.
Okay, so we've really covered a lot today, a deep dive into some fascinating projects. The real-world utility of render token and tokenizing compute power. Solana's speed and its trade-offs. The strategic merger creating the Superintelligence Alliance for Decentralized AI. Bitcoin's enduring strength as that foundational asset. And the key roles of Ethereum and Aave in the DeFi space. It's just so clear that this market is this potent mix of huge opportunity and pretty significant risk. It demands you understand the tech, but also have a really realistic approach to investing.
Absolutely. And maybe that brings us to a final provocative thought for you, the listener, to mull over. Given this incredibly rapid pace of innovation we've talked about and the volatility that's just inherent in the space, what truly defines value in cryptocurrency? Beyond just the market cap number you see. How does understanding that concept shape your perspective on its future? And maybe how might that influence your own approach to navigating this constantly evolving landscape?
That's a fantastic thought to end on. Really makes you think. Thank you so much for joining us on this deep dive today. Keep exploring, keep learning, and we'll catch you next time for another journey into the fascinating world of knowledge.